Hello and welcome to this special chat. Markets may be down recently, but the current pullback follows what has been a period of exceptional returns for the last few years. Consider the statistics. The midcap index CAGR returns for the last 5-year period ending 2024 is 27%. The same number for the small cap index is 26%. The CAGR returns for the Nifty for the same period is nearly 15%. Well, you'll call that modest versus what the mid and small caps have done, but still higher than Nifty's 25-year return scorecard. The booming markets have set off many new trends in the markets. The question is whether these trends are fleeting or here to stay. One of the trends has been foreign MNC companies listing in India. We've had Hyundai India's near 28,000 crore IPO, the largest Indian IPO ever, which really put the spotlight on this phenomenon. Reports suggest a healthy pipeline as well, LG India being a prominent next one. We have Norway's Orkla, which owns MTR Foods. There has been talk of hair appliances trying for an IPO. Hindustan Coca-Cola Beverages has been rumored to be in the fray as well, and many more. What is the reason behind this interest, and is this durable? Well, we have two gentlemen with us who will bring us the answer. Cyril Shroff is the managing partner of Cyril Amarchand Mangaldas. Raj Balakrishnan is co-head of India Investment Banking at BoFA Securities. Gentlemen, great to have both of you here. Thank you very much for your time on CNBC TV 18. Mr. Shroff, if I can start with you. First up, is this a departure, what we've seen recently, all this interest, the listing, or it's not really? I mean, it's, because the Hyundai IPO being so large, it's being seen as one. What is your sense? Put this recent phenomenon into some historical context for our viewers. Go on.
So I think this is the beginning of a trend, and Hyundai is not the only one. I think there have been a number of issuances already of similarly structured companies, and there are many more in the pipeline as well. And it is really a reflection of what is happening in the Indian markets and the Indian economy as well. I think the starting point, of course, is the Indian economy being on such a strong growth path with the economic fundamentals. Then the depth and the robustness of our domestic capital markets and the ability to list as well. There's also an issue of relative valuation in the home markets of the parent as well as their Indian subsidiaries or the Indian entities. There is a massive delta between the two as well. And it goes without saying that what we are observing is that the Indian market is offering a very high multiples and success at listings as well. And apart from foreign multinationals kind of choosing to list in India, there is also the start of what you might have heard of as the kind of reverse flip or the ghar wapsi of kind of Indian structured businesses, or where the majority of the business was in India, but the companies were registered offshore for offshore listings as well. They're flipping back and coming back to India as well. So it starts from the same starting point of the Indian market is a very attractive place to list, not only for Indians who had gone out and are now coming back, but also multinationals who are choosing to list their Indian subsidiaries over here because there are very, very strong economic and commercial reasons to do so. So it's a trend.
It's a trend, and it's with the start of one, Mr. Shroff, that's what you're saying. Raj, as a veteran banker, I mean, your insights on this. I remember when the Hyundai IPO was happening, we were talking about how in Korea, that business gets about 5 times multiple. Here, of course, I mean, auto companies get anywhere between 40 and 50 times. Is that the big attractiveness, the kind of valuation that you can get here in India? What are your thoughts?
So the way I look at it is that the valuation of the India businesses of these entities is for good reason, which is that the India businesses of a number of these multinationals are growing faster, are more profitable, and probably have a much longer horizon of growth than their home-based businesses. And effectively speaking, so you have this jewel in the crown, so to speak, for a number of these companies, which is not getting the right reflection and the right valuation in the parent company valuation. So we've seen this happen in other sectors around the world. For example, you've had a number of companies globally listing their tech subsidiaries or spinning off businesses in order to try and identify and unlock value. And I see the India subsidiary IPO as a continuation of that trend. So you've got businesses which are growing very rapidly, which are extremely profitable, which are leaders, and the market in India rightly gives these businesses very high multiples, which hopefully will help unlock value for the parent as well.
And you would agree with Mr. Shroff that this is the beginning of a sort of trend, an acceleration, a trend which is perhaps will accelerate going forward?
I agree fully. You've had a number of multinational companies, and I won't take any specific names,
right,
which have built extremely strong businesses in India over the last 30 years, but you've seen very few of them listing. And with SEBI having simplified a number of the regulations around listing in India with a few successes, I think what will tend to happen is you'll see boards of parent companies and their shareholders taking notice of the fact that, hey, we've got this great India business. It's something which, our peers in India who have listed subsidiaries, their entities trade at very, very high valuations. So why should we not be looking at this quite seriously?
Are there any other reasons, Raj, apart from the valuation, which you say, rightly so, because growth rates here are much higher, but are there any other compelling reasons?
It becomes a very attractive means of raising capital for the parent, right? So you have a number of these examples. So, for example, Hyundai was entirely a secondary sale. So that money went back, it's hard dollars going back to the parent, representing a return on the investment that they've made in India. Secondly, it also signifies a commitment of the company to the Indian market. And for any company which has got a strong consumer brand, helping their consumers become stakeholders in the prosperity of that business is always a positive as well. And so I think it's a combination of factors. It is a commitment to India. It's a commitment to the Indian consumer, helping make your consumers your partners in prosperity, so to speak, as well as a great way of getting cash back, return on investment back to the parent without giving up control.
Hyundai is now, but the good old Maruti, right, is just a shining example. I think even now, the Maruti India listed entity perhaps contributes, if you do a SOTP, perhaps the bulk of the big driver for the overall Suzuki business is, the Maruti, the India sort of subsidiary in that sense. But of course, we consider Maruti a homegrown business, even though it is an MNC. Mr. Shroff, Raj briefly alluded to the regulatory landscape, et cetera, as well, and you sort of alluded to that in the first response. Could you expand on that? What is that looking like? Has that become easier over the years? Has it become more welcoming?
Oh, absolutely. And what Raj mentioned, and building on some of my introductory comments, is that what has happened now is that effectively the Indian markets are unlocking value for the world. It builds on the many themes that are going on, Make in India and things like that. The newest addition to that slogan is unlock value in India, particularly when you have entities like the subsidiaries over here where you could access the Indian capital markets. But now coming specifically to your question, I think the answer is yes. If you go back in history, exit in India was very difficult. It was very problematic for tax reasons, just the administrative protocol. Now it is so easy to do that. So amongst the regulatory changes that have enabled this is that exit on the market through an offer for sale. Many of these are through offer for sales, have become much easier. The listing norms have also been simplified. For example, the minimum public float that is required above a particular capital size has been reduced in order to enable these, because these are very large businesses that have built up over a period of time. And if the full 25% was applicable for listing, I think the companies would have struggled. So the regulator and the policy environment has been very practical in enabling this by making all these adjustments that were required in order to enable this. Also, the corporate governance rules. I think there is an assumption that these sort of companies have better corporate governance, which is why they command better valuations and get better, higher multiples when they list as well. So the change in and the tightening of and more clarity in relation to the corporate governance framework has also been a contributory factor. So all in all, if I can call it, the regulatory mahal has been sufficiently adjusted to enable these transactions to happen, and now they happen in a jiffy.
No, and I think the depth of the markets as well, right, Mr. Shroff? Whirlpool, for example, wants to. I mean, I think the global CEO was on record last year. It was saying that why not take advantage of the valuations? I mean, they did one round, they're doing another round. And of course, the market is deep enough to absorb that. So there is that as well. What are the size of the opportunity in that sense? Raj, if you want to take that. I mean, if this is we're at the beginning of a long trend, how large is this going to become? Will we see, a couple of listings every year, large ones?
I think it's actually a massive opportunity. If I were to just look at the kind of dialogue that we have, we probably have a dialogue with, several multinational corporations which are evaluating the possibility of a listing in India, literally 2 or 3 such dialogues every month. So there's several companies which have built very, very strong businesses in India. Now, of course, a decision to list in India tends to be seen as a somewhat irreversible one, or at least something which cannot be reversed easily in the short term. And therefore, people do evaluate these decisions very, very carefully. But I do see this as a trend where you could see not just 1 or 2, but several companies getting listed each year for the next several years, if I just look at the number of MNCs that we are having dialogues with.
Okay, a couple of every month basically is what you're saying, at least in terms of conversations. But of course, they take their time before deciding. Mr. Shroff, I mean, same question to you. Size of opportunity before we drill it down to more specifics?
Massive, and by definition, many of these transactions are very large. They're all $1 billion plus as well, just in terms of the ticket size of several of these transactions. So I agree with Raj completely, and he and I probably are part of many of the same conversations as well. And the reason for that is the economic reason is that the multiple that is available in the Indian market is so much higher than in the home markets that it's in many cases it's a no-brainer. And there are many large. I mean, if you just go through the list of MNCs that have large businesses in India and are potentially listable. There it is, and you will get a sense of, there are American companies, there are European companies, there are Japanese companies, the Korean company, Hyundai was a Korean company as well. So the economic argument is very straightforward. I think what the multinationals have to get used to the idea is that they will then have to deal with the Indian regulatory environment. And the Indian regulatory environment is different from the home environment. In some ways it is stricter, in some ways it is more liberal, and in some ways it has yet to evolve into a kind of a more mature state. But that is happening all the time. So those are some of the trade-offs, but a lot of that gets trumped just by the delta in the valuation. Sometimes it is the home market gives you a 5 or 6 multiple, and here you get 40, 50 just to take an example, and I'm talking of an actual case. That is the level of difference.
So it's worth the trouble, if I can use that word, Mr. Shroff. That's what you're saying. And
well, very, very nicely put.
And also, is there? Have you looked at the number of companies we can look at? I mean, you did say all countries from around the world are here, right? In terms of business operations,
yes,
etc. So have you done any kind of exercise which potentially puts a number to that sort of a figure there?
So I think what Raj said, I think we are all involved in a couple of conversations every month. And all of them will make a visit to Raj and to me. But we're not going to talk names here.
Okay, no, absolutely. Fair enough. Confidential conversations. And of course, we'll know when we know.